Okay, so this is our presentation for engineering economics. Our course project, our company was Nike, and it's myself, Seth Dornak, and my partner, Thomas Curran. The overview of our presentation will include our company history, a review of financial performance for the past 30 to 60 months, our recommendations regarding the investment, review of the stock market, and our conclusion and recommendations at the end of our analysis. Our company is Nike, and it is an American multinational corporation that is engaged in the design, development, manufacturing, and worldwide marketing and selling of footwear, apparel, equipment, and accessories and services. It was founded in Beaverton, Oregon, in the Portland area, and that was in 1964. Originally, it was known as Blue Ribbon Sports, and that was initially operated by Bill Bowerman and Phil Knight. Initially, they operated as a distributor for Japanese footwear brand Asics, and they both bought the company for $500 with investment, totaling $1,000 for total investment. In 1964, their profits reached $8,000 within their first year of operating, and in 1965, their totals were $20,000 of profits. And then in 1966, things began to pick up a little bit, and they opened their first retail store in Santa Monica, California. Also, in 67, they began to expand to the East Coast in Massachusetts, and then in 1969, you can see that they sold $1 million worth of shoes. So things began to build up very quickly for them. In 71, the relationship between Onitsuka Tiger was nearing an end. BRS prepared to launch its own line of footwear, which would bear the newly designed swoosh. The swoosh was first used by Nike on June 18, 1971, and then was later patented on January 22nd, 1974. In 74, Blue Ribbon Sports opened its first U.S. plant in Exeter, New Hampshire. The company's payroll swelled to 250, and worldwide sales neared $5 million by the end of 1974. 1976, the company hired John Brown and Partners, based in Seattle, as its first advertising agency. The following year, the agency created the first brand advert for Nike entitled "There Is No Finish Line." In 1977, sales doubled from just the year before to $28 million. To keep up with the demand, the company opened new factories, adding a stitching plant in Maine and additional overseas production facilities in Taiwan and Korea. International sales also began to expand when markets in Asia were opened, and along with South America and European distributors. In 1980, Nike had attained 50% of the market share and began to become public or went public in December of that year. Throughout the 1980s, Nike expanded its product line to encompass many sports and regions throughout the world, and in 1990, Nike moved into its eight-building world headquarters campus in Beaverton, Oregon. Despite a hugely powerful brand and the financial credibility to promote it all, Nike has not been without its share of negative publicity since its inception 50 years ago, which later we'll talk about in the 1990s, when The media reported on poor working conditions and underage labor in countries such as Vietnam, China, South Korea, and Taiwan. In the 2000s, their struggle continued, but by 2002, the company appeared to take a new approach and decided to make a turnaround for the company and basically go about running a business the correct way, such as investing in the state-of-art information system, logistics, and supply chain management, all of which benefit the corporation greatly up to the present day. The markets served. Nike pays top athletes in many sports to use their products and promote and advertise their technology and designs. The company includes 5 distinct brands, each with powerful connection to its customers. Nike designs, develops, and sells high-quality athletic performance gear. They have Converse, which is designs and markets casual sneakers, apparel, and accessories. Hurley International, which is for surfing and youth lifestyle. Jordan designs and markets premium footwear, apparel, and accessories inspired by the dynamic legacy, vision, and direct involvement of basketball great Michael Jordan. And then Nike Golf, which is design and market golf equipment and accessories. And at this time, I'm going to hand it over to Thomas, and he's going to finish it up.
That's great. Thanks, Seth. So I'm going to talk a little bit now about the industry as a whole and some analysis of that. First of all, a description of the sportswear industry. In 2012, the sportswear market globally grew by more than 7.5% and exceeded $244 billion. Valued at an estimated $80 billion, the US market for sportswear is by far the largest globally, over 3 times higher in value than the second-ranked sportswear market, China, according to global industry market research experts Euromonitor International. The 4 largest markets, the US, China, Japan, and Brazil, collectively accounted for over half of total sportswear sales in value terms in 2012. The increasing interest in fitness and athletics clearly shows that consumers are seeking to be healthier. Sports-inspired clothing is increasing in popularity in the US, and both apparel and footwear experienced 6% increases in current value sales in 2013. Overall, sportswear experienced growth of 4% or higher every year since 2010, which inspired a number of retailers to enter the category at the casual end. In addition, the athleisure trend, which is a broad category of fashion in which clothing is suitable for either athletic or leisure pursuits or both, led to an increase in sports-inspired apparel as consumers can get the look they desire without the price tag associated with high-performance clothing. One of the biggest threats to growth is an end to the aforementioned athleisure trend, which would be a large factor in slowing the growth of sportswear. In terms of Nike's position within the industry, they remained the brand leader in sportswear in 2013 with a 19% overall retail value share. In 2012, Nike launched running footwear featuring its Flyknit material, claiming that it is environmentally friendly and will help to drive down production costs. Nike has high hopes for the material, and in 2013 extended its use beyond running footwear to include basketball, sportswear, and soccer footwear. The company has designs to continue using the material, and it is expected to appear in a greater variety of footwear and even in some apparel items. Competitor Adidas remained the second-ranked sportswear brand with a 4% share of sales, significantly behind Nike's, followed by Under Armour with 3%. Nike's target market really is active people who enjoy high-quality sporting goods, in particular footwear. According to their own segmentation strategy, segmentation in this case referring to the practice of dividing a gigantic and hugely diverse target market into subsets of consumers who have common needs and priorities, and then designing and implementing strategies to target them, they actually see their target customer base as high-end, high-income level, and between the ages of 16 and 55. Nike is exposed to the international nature of trade. It buys and sells in different currencies, therefore costs and margins are not stable over long periods of time. Such an exposure could mean that Nike may be manufacturing and or selling at a loss, which is an issue that faces all global brands, including their major competitors in the sportswear industry. Consumers have been very value orientated since the Great Recession, and this category is ripe for sales amongst low-priced entrants. Although Nike has its own retail outlets, much of its income is derived from selling to retailers, a sector which is incredibly price sensitive. So now I'm going to talk a little bit about Nike's recent performance in the stock market. This is the last 3 months of data from August 22nd through to November 19th. As you can see, it has done extremely well during that period of time. The monetary value of shares in Nike have increased by 20% since September alone. This appears to be the result of highly impressive earnings announcement made by the company during that month. The earnings announcement itself came shortly after the conclusion of the FIFA World Cup, held in Brazil, in which Nike enjoyed a month's worth of global television exposure due to the fact that many of the teams, including the host nation themselves, Brazil, and many athletes on show were wearing Nike branded apparel and footwear. So now I'm going to move on to the analysis that we did of different ratios based on the company's recent income statements and balance sheets. So there are 3 graphs, which is going to start with the return on assets section. Will be to demonstrate earning power. For the next graph to showcase short-term liability obligations, I'm going to talk about the current ratio. And then finally, to showcase the long-term liability obligations, I'll talk about the debt-to-equity ratio. Each graph starts in 2011. There are 4 years' worth of results for the company, which is the subject of this report, Nike, and 3 years for the industry average. The reason for this is because the companies on which I calculated the industry averages for comparison, i.e. Under Armour, Puma and Adidas, are yet to release their balance sheets and income statements for 2014. For all of these graphs, Nike is represented by the red coloured line, whilst the industry average is blue. So first of all, the return on assets, which is an indication of how much benefit the stockholders of a company obtain from their ownership of the company. As you can see here, Nike is over 9 percentage points ahead of the competition when compared by this financial ratio. Also, since 2011, their return on assets has increased, in contrast to most other players in the industry. Both of these facts are very impressive. Next, the current ratio, which for any business should be a value greater than 1. This is an indication of the company's ability to cover short-term liabilities within its current assets. Current ratio is one of 2 similar financial ratios, the other being the acid test ratio, and is the less stringent of the 2. A similar trend to the ROA graph is exhibited here. Nike had an above industry average CR. In 2013 to last year, the gap was as high as 1.34%, and when compared to their competitors between 2011 and 2013, Nike's is also increasing compared to the general industry downward trend. Finally, the debt-to-equity ratio. It's almost unique amongst financial ratios in that it is the only measurement for which a lower value is better than a higher value. Again, here Nike outperforms the competition by keeping their DTER consistently lower than the industry average. However, it should be noted that the value is increasing while other companies are maintaining their DTER at a steady level. So finally, I'm going to conclude the presentation by talking about Nike as an investment and also as a potential employer. Nike are the market leader in sports apparel, footwear and equipment. They have highly impressive financial ratios when compared to the industry, enormous brand exposure, and continued growth will come from the World Cup this year and from the 2016 Summer Olympic Games. Analysts say that Nike has continued to take market share from Adidas and Under Armour, their competitors. In terms of being a potential employer, the company has traded for 50 years and established itself as the market leader in a very highly competitive category with a notoriously fickle target customer base. Despite some adverse publicity, which we mentioned earlier, its financial soundness, consistent track record of profitability, and reputation for best-in-class research and development, as well as its commitment to maximising positive publicity whenever the opportunity arises, all point to a prospective employer with prestige, above-average remuneration and benefits packages, and the prospects of progression. In short, Nike as a company represents both a very good investment opportunity and a very good employment opportunity.